CPI February coming up in 15 minutes. 319.17 expected. CPI February coming
Gold
up in
braces
15
for side
minutes.
effects of U.S. CPI release on U.S. rates.
17 expected. CPI February coming
Gold
up in
braces
15
for side
minutes.
effects of U.S. CPI release on U.S. rates.
17 expected. CPI February
Gold braces for
core inflation rate month over month February coming up in 15 minutes. 0.3% expected. Core inflation rate month over month February coming up in 15 minutes. 0.3% expected. Inflation rate month over month February coming up in 15 minutes. 0.3% expected.
CPI SOA, February, coming up in 15 minutes, 320 expected.
Core inflation rate year over year February coming up in 15 minutes. 3.2% expected.
Inflation rate year over year, February, coming up in 15 minutes, 2.9% expected.
U.S. dollar braces for U.S. CPI amidst geopolitical headlines.
gold braces for side effects of U.S. CPI release on U.S. rates. Brazil IPCA inflation came in at 1.31%, above expectations, 1.3% in February. Bank of Canada likely to trim interest rate again as U.S. tariffs fuel trade uncertainty. African Payment System. PAP says plans to launch FX market platform this year.
Canada to announce $29.8 billion in retaliatory tariffs on U.S. officials says. Good morning.
Exclusive Ukraine bets on U.S. LNG as gas import needs rise.
We will have contact with Russians today. Rubio. Pound US dollar technical analysis. Awaiting the US CPI release. Forex Live European FX News Wrap. The calm before the storm.
All right, so if you want this squawk running while you're trading throughout the day, you can use the free version here on YouTube. But let's get going. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis of, technical and fundamental analysis, the overriding goal of planning our trades in advance. Because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of Indicative of future results. Please stay small, stay humble. Focus on the long term. Never risk money you cannot afford to lose. Cool. So we're going to use the Traders Way platform as we always do, as I have been for over 10 years. They're a wonderful trading execution partner and they're an ECN. You want both. Today we'll also use some traders.com for our fundamental and technical analysis. So you might as well get on with that since we have CPI coming out. Let me pull that up. Oh, yeah. It's a little slow. There we go. I wonder if... Oh, my PC is slow? What? No, my browser's slow. Oh, there's a glitch in the browser. Yeah, updates, man, make things worse, huh? Anyways, here we are. My name is Wayne. I've been doing this a long time. I love finance. I love capitalism. I love money. Oh, that Wayne, you love money? That's bad. No, it's not. Money is good. Money gives you the power to do things. Gives you the power of comfort, the power to help. You got no money, you got no car, you got no woman, and there you are. But anyways, we do our fundamentals and stuff automatically. Everything's good in the hood. Oh, look at that. That's interesting. I haven't seen that in a while. So we're neutral at the moment. And that's that. Markets are coming down, and that's that. I've already gone through everything here today on our previous webinar. This is the second or third webinar of the day so far at traders.com. I guess what I actually want to do is get to this. What are the technicals driving Euro-US? So we have 7 minutes until our CPI rate. Does it create volatility? Yeah, well, we've organized it by less than expected and greater than expected. Looks like this is quite volatile, and then as expected. So there's volatility and there's pattern in regards to all scenarios today. This will produce vol. And so we're looking at volatility on the 2 hour, the 4 hour, the 12 hour, and the 48 hour. And so the first thing is there a reliable, repeatable pattern on the short run? On the longer run, you should be able to, you're already swing trading and stuff like that. So this is actually helpful for swing traders. But what I think you're most interested in is what happens today if it comes out greater than, less than, or as expected. So if it comes out as expected, 0.3, there's a scalp on Aussie, scalp on Euro, but not pound. There's a scalp on Kiwi. There's a scalp on USD Swiss franc, but not on USD yen. Sort of mixed. And this says dollar strength. This says dollar strength. There's no scalp. This says dollar strength. This says dollar strength, and there's no scalp. So in general, in the past, when CPI came out as expected, the majority of the time in the past, the outcome was dollar strength. All right, so what if it's greater? No scalp, no scalp, dollar strength, no scalp, dollar strength, no scalp. So greater, there's no reliable, repeatable pattern on the short term. But it ends up being generally dollar strength, it looks like, huh? Yeah. Okay, if it comes out less than expected, in the past, we saw scenarios of scalp, 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 scalp. Okay, so if it's less than, it's a scalp. And check this out. Dollar strength. Dollar weakness. Dollar weakness. Dollar weakness. Dollar strength. Dollar weakness. No scalp. Do not trade USD on this. Interesting. So how do we make sense of this? Dollar strength, dollar weakness, dollar weakness, dollar weakness, dollar strength. So CAD and Aussie in these scenarios, much of the time weaken even more. So I guess they're interesting. We'll have to pay attention to that. But I would say if it comes out less than expected, what we've seen in the past is generally dollar weakness. And then here, generally dollar strength. Is that right? Dollar strength. But look at Aussie. Yeah, because there's no scalp. No scalp, no scalp. Okay. Greater than no scalp, as expected, some scalps, and lots of dollar strength. So it seems like no matter what happens, about 2/3 of the time, dollar strength comes out of it, or there's no scalp at all. Because even when the dollar weakens, even when the US dollar weakens, for some things, it weakens other things more. So it looks like strength. On 2 of the 4 opportunities for scalping, 2 of them happen to be dollar strength, where the other things are dollar strength and dollar strength. So, interesting. That's really interesting. I wonder what is going on in here for Aussie and CAD to go in the opposite directions. Interesting. My guess is it's higher, huh? No scalp, no scalp, no scalp, no scalp. I mean, there's a little scalp here, there's a little scalp here, there's no scalp there, there's no scalp there, there's no scalp there. So only, again, sort of commodity related. This one, pound and Aussie. And that ends up being dollar strength. But not against Aussie dollar. Interesting. Just strange. But that's what's happened in the past. So if I were to guess, and I don't like guessing, but if it comes out hot, 75% chance euro dollar falls. Let's see, a pop and drop, drop and drop. Seems kind of sketchy, even though we're going to get vol. Seems kind of sketchy. Let's move over to the live market. 1 minute to go. What are the technicals driving euro US dollar yen, and pound US dollar at the start of the NA session?
India inflation weakest in 7 months.
US dollar braces for US CPI amidst geopolitical headlines.
Gold braces for side effects of US CPI release on US rates. Markets wait for US CPI data. Brazil IPCA inflation came in at 1.31%, above expectations, 1.3% in February. Bank of Canada likely to trim interest rate again as U.S. tariffs fuel trade uncertainty. African Payment System. PAP assess plans to launch FX market platform this year.
Canada to announce $29.8 billion in retaliatory tariffs on U.S. official says.
Exclusive Ukraine bets on U.S. LNG as gas import needs rise.
Okay, we're looking at if we can get above 0.3, plausible dollar strength with euro dollar breakout to the downside. 17 seconds. 9, 8, 7, 6, 5, 4, 4, 4, 3, 3, 3, 2, 2, 2, 2, 1, 1, 1. Here we go. Wait for it. Last time was 0.5. We're expecting 0.3, and we got 0.2. It's lower than expected. So slight chance on USD weakness, but in the opposite direction. So let's move over to the charts. Okay, less than expected. That's for some that's going to be good news. For some others, that's going to be bad news, because that is going to flame the idea that we're going into recession. Yep. Oh, look at this. That's a bull entry right there. Interesting. I wonder if that'll come around. We'll see. Pig and USD, they're doing, what are we doing here? Okay. Now, I covered this on Sunday. And on Sunday, the scenario was, wait, it's going to move sideways until the 4-hour 21 catches up. And then the next target is here.
Inflation rate. Year over year, February has come out. 2.8%.
Exclusive Ukraine bets on U.S. LNG as gas import needs rise.
Cool. It's getting good, huh? It's getting good. So anyways, that's the thought there.
Core inflation rate. Year over year, February has come out. 3.1%. Exclusive Ukraine bets on U.S. LNG as gas import needs rise.
Kind of cool, huh? Yeah, very cool. Let me find it. So it's just running in the background. That's how you use a squawk box.
CPI today, February, has come out. 319.735.
Exclusive Ukraine bets on U.S. LNG as gas import needs rise.
What are the technicals driving euro US dollar yen, and pound? Cool. Okay, looking at yen. Yen is still showing market sentiment for yen strength. So Raymond is like, hey man, so why are they weak today? I say, well, that's a very good question. Let's ask our technical analyst. Hey, chart bitch, get over here. I think that's it. Oh. Okay, good. Let's get rid of trends. Oh, we'll do trends and reversals. Okay, possible breakout, possible breakout, possible breakout. Okay, possible reversal. Nothing. This is setting up for a sell later if you're a bear on this. Currently, this is a threat to bears. Okay? This is sideways, next leg up, but of course, we're watching now, will it make a higher high since it's trying to do that on the higher line. On the 4 hour, this is bullish with an opportunity. This is bearish with a threat. Okay. So lots going on there. We can say give us everything. Okay. USD yen on the move. USD yen trying to make a high, or Swissy yen trying to make a higher high. CAD yen back to where we were. Back to where we were. Maybe potential breakout or at least up into the top of the range. Notice that a lot of these arrows are up. Hey, Raymond? So, why are the yens up? Many of them, not all of them. It seems like it's technical. That's one place to start. So like Kiwi's probably too early to tell because you're doing some basic technical analysis. Oh, I don't have my drawing tool up yet. Amazing. Kevin says on the longer term, it just looks like a pullback. Yeah, sure. All right. So we go over here. And so how should we treat this? Well, this is why we do technical analysis. So on this time frame, we're sideways, right? Okay, great. This came out 3 hours ago. Fine. Now, what if we get through this? Oh, you guys have echo going on? Let me check. Yeah, I got a Microsoft reboot, and it always messes things up. Let's see. Yeah, there is. All right, that should be better now. Is that better? In sooth, I know not why I am so sad. So we have that technically, may not be fundamentally, but fundamentally we have also seen, so like, let's go back here. Oh man, I have to fix that. Why is it doing that? Okay. Okay, so when we look at things fundamentally, you can see like euro yen was very, 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 very bearish. And then something changed around the end of February, beginning of March. It was bearish, but significantly less bearish. And then on the 5th of March, so what is that, 10 days ago, 9 days ago? We went very, very significantly less bearish, in fact, neutral. We went from very bearish to bearish, and then bearish to neutral, and then as of today, we actually have a neutral bullish signal analysis of euro yen. Yeah. Oh, there's no trust to AI, Raymond. I have no trust. This is data. I'm receiving data. But I'm still the boss. So think of it not as AI, but think of it as automation. So these scores are coming from interest rate differentials, jobs, inflation, productivity, technical trends, seasonality, retail positioning, and institutional positioning. And so, it's just automating that thought process into a score. There's no trust. It's just that's the data. And when you add it all up, comparing Japan to Europe, something definitely has changed. It could be euro, it could be yen, it could be both. Now, I believe there is a change here of money flowing out of Mag 7 and into European stocks because they were cheap. I did talk about it in December and January. As possible. Okay, great. So is that the same across the board? Is there anything you're bullish on? Well, check this out. Here's a little hack. CAD yen still bearish, Aussie yen still bearish, USD yen is still bearish, Kiwi yen is still bearish, Swiss franc Japanese yen is neutral, pound yen is slightly bullish. Okay, not in price, but in score. Okay. Now the nice thing about this is you're lining up fundamentals with technicals, so you can see, let's say it's up today. Are you really into it? So you have to think about it. What are you trading? Are you trading this? Okay, or are you trading something like this or this? Well, right now we're slightly bullish on pound yen fundamentally, but maybe that'll change. Okay, what we know is seasonally, okay, this usually falls. But what you want to do now is say, well, if you look up seasonal, does it fall in April? So you already knew it was going to fall now. So now the next thing is, will it fall next month? Because then you can say, well, we're halfway done March, and if March is down and we're already down, it doesn't mean it's going to fall all of March. So it may be some other period, it'll go this way, and then start April on an upswing. But if April is down, not just March, but April, then you wouldn't think that, because you're like, well, March is down and April is down. So, yeah, no way this is going to recover, right? So what would you do? That's what I would do if that's what I thought. So how would you check that? So what do we see? March to April. So Raymond, maybe, because I don't know why everyone else started buying yens. We just know that the yen pairs are up. Why? Well, one theory is we anticipate somewhere between the middle of March, because March is down, so at the very least the beginning is down, right? And somewhere in March we find a lower low, and then once that's discovered, it starts to recover from the middle of March to the middle of April to the middle of May, and then somewhere around June we peak. Oh. Well, hell's bells, that's good information. Will that happen? Oh, we don't know, and this time is always different, right? Like in the earlier webinar, we were talking about the Bank of Japan and future interest rates. Is it 1, 2? Is it 2, 1, or none? So we talked about all of that. Would that impact what is normal versus what's happening now? Yes. Would global trade wars impact the flow of yen or pound? Yes. So every year is different, but every year is kind of the same. Pretty sure it won't snow today, but it could. Pretty sure it won't, though. Okay. So you can have this theory of maybe it's an opportunity to get back into the yens because they're so sold. I don't know. Look at that, my implied top. I crushed that rally. Ha ha ha. All right, so let's say you thought this way. Remember, not now, but you thought about this earlier. Okay, earlier. You started March with the assumption of down, but somewhere in March, it'll stop falling. How would you play this zone here? Plausibly supportive? Yeah, it's plausible. And then you wouldn't be pointing this down, you'd be pointing this up, right? So you'd be a bull. Okay, great. And you're like, we hit this and stopped, 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 and now are we going to make a higher high, higher low? The question is, if we do, what are you going to do about it? Do you even notice? When I'm not around, Cool. You see? So to answer Raymond's question, let's say like, why are yens strong? Somebody had a bullish plan and they're combining seasonality with price action, price forces. They found a level of support and that's their plan A. Their plan B is probably somewhere down here. Okay, great. So now we know if this trade, so your stop would just be below the lowest low. Okay. Okay. So you should have bought down here. There's no doubt. So where are we? 90, almost 93. The pullback was 89. Okay, cool. On our way to 96. From 89 to 96, we were at 188. Dude, okay? That's a good swing, huh? This is why I wonder why scalpers like making 20 pips at a time when some basic analysis can say, well, that's going to go up 800 pips. Okay? So anyway, someone's threading that together, and then therefore, if it's going to go beyond 196, because that's only 1 month. So let's just try to guess here. Let's say that's the first move. It won't let me do it. I thought I could do it. All right. Now, well, let's do another one then. We'll do it brute force way. I know I'm not doing it right, but 2 months. Three months. So if the implied volatility stays about the same, we can start to target, I would say, that top to this top. 206 to 212, 211, 212, 211, 212. Let's just make it 212. If you're going to guess, keep it nice and easy, right? There we go. All right, what do you think? So how do you think, if we were going to do that, how would we get to that point? Well, we're probably not going to do based on previous implied vol, but notice the implied vol has been tight for weeks here, and if there's a breakout, it's probably going to go higher. But we still have to follow sort of normal rules of engagement. We're not going to get all excited about it. Okay, what would be normal? Let's just talk about normality. Okay. So if we're going to go here, currently we're not likely to do it this month. So we'll do it next month. And then because we identify it as resistance, it will be respected. And then we'll get a breakout, a pullback, and then somewhere in there. So March, April, May, and probably as we approach this, if it's late May, because we don't know the velocity, but if we hit this in late May, early June, you're going to be inclined to take profit. And if we're going to hit this, let's say we get there faster, and we're up here at 212, and it's late May, early June, you would be inclined to take profit. Because it's time to reap what you sowed based on what normally happens. So only 3 people click thumbs up, huh? No, I got you, Raymond. I'm just showing you one way to move through a thought process. Is that my opinion? Not necessarily. Do I think that'll happen? I don't know. But it's the process, right, that I care about. Yeah, only 3 thumbs up? Well, I must apologize then. I'm sorry. Sorry to let you down. I'll try harder, I promise. Don't be mad at me. Oh, you see 12? That's it? Well, I'll refresh. Well, now it's 22. Yeah. So now it's 22, which means 50% of the viewers are not happy. Yeah. Well, again, to you guys, I apologize. To everybody else, thanks for having my back. All right, let's look at CAD, because CAD's a dog with fleas. Why are the yens going up? Well, 3 months ago, and then 2 months ago, and then 6 weeks ago, we had CAD yen falling from 110 all the way down to 101. We got to 101.38 and stopped. Okay? What do you think about that? Maybe we're just done. Maybe we're just done for now. Is it possible the pattern has just come to fruition and traders are taking profit? I said 101. It's actually 101.06. And we got to 101.37. So we missed it by 31 pips. A pattern that we did 6, 7, 8, 9, 10, 12 weeks ago. Yeah, so the biggest thing really is you have to decide, are we actually going lower again, or are we done? Okay? The next thing I wanted to show you is this is the lowest low, and that is why we stopped. So are we done? Maybe. Right? So there's only 2 choices. So this is completed Gartley. So now it's like, are we going to do another leg? Another leg would look like this. And that would be a breakout. So, is that what you believe? We only have 2 green candles on the daily. We also have a predictive moving average that says the 21 EMA in the future will be at the price we're at now. The third thing is, if you're going to use price action, okay, this is an area of interest. That's why I drew it that way. So now it comes down to your interpretation of, is this double bottom important? Do bulls buy double bottoms? Yep. Do bears take profit at double bottoms? They could. So you have to be able to understand that this is an important price level. And you need to be able to understand that this is an important price level. And you need to understand what your intention is, meaning what is your bias. Okay, so we measure this. We'll take it from here to here. Is there going to be another leg? So let's pretend you're a bear. Let me draw this. If you are a bear, let's say 50% retracement gets you down to here. Is that what you intend to do? And maybe it happens sooner than later. Or we're going all the way to the top. This is where you make a decision, fundamentally, technically, or you flip a coin. Flipping a coin is fine by me because you've made a decision. Are you buying dips or selling rips? I don't care how you get to your decision, but it shapes everything you do. I'd say most traders that suffer have no idea what they're doing. They buy because they see green candles. They sell because they see red candles. And you know that's why they lose money. There's no alpha. Well, Kevin, when we do technical analysis, okay, if you respect this line, you're not a bear. You just know there's a threat by bulls. Or maybe your bearish brethren are going to wimp out. But if you're truly a bear, you don't give two hoots about this. It doesn't matter if you think the global stock markets are crashing and it's going to fall hard the next 6 months. Well, if that's your theory, oh my God, that's such an easy decision. Not a problem. Child's play. But if you think it's all over and it's all overblown and there's going to be a massive recovery in the stock market, well, at the very least, we'll do this. And then that makes you more of a bull. So then you're probably going to think about something like that in the future. And I would say this would be from April to June. This would be September to December.